This is episode 12 of the Bitcoin price report for December 31st, where we discuss the macro, the micro, fundamentals, and technical analysis with a focus on the Bitcoin price. Today, Bitcoin is at 16,500, down 0.2% from a couple of weeks ago. It's in the middle of the consolidation range between 15,500 and 18,500. So we come to the end of 2022. Bitcoin started the year at 46,200 and is now down to 16,500, down roughly 64% for the year and 76% from its peak of 69,000. The CBBI.info index stands at 5 in the undervalued range. Let's now move to the Bitcoin outlook for 2023. Stocks and bonds had a rough bear market in 2022, but crypto was worse. There were collapses in Luna, Three Arrows Capital, bankruptcies in Celsius, Voyager, and the FTX fraud marked one of the most difficult times in crypto and may set back the industry for years to come. We should expect more downside with harsher regulations. In 2023, creditors of the 2014 Mt. Gox bankruptcy will finally start to get repayment for some portion of the 140,000 bitcoins they recovered, and should create some sell pressure in the tens of thousands of Bitcoin. A Genesee bankruptcy could potentially lead the digital currency group to unwind the Grayscale Bitcoin Trust. In the unlikely event that happens, there will be tremendous sell pressure in the hundreds of thousands of Bitcoin. However, the biggest headwind for Bitcoin is that the US will likely be in an official recession in early 2023. With all this in mind, my price prediction for Bitcoin is that it goes to a low of 9,000 to 12,000 in the first half of 2023 before rebounding. Remember, these are predictions, these are just for fun, and most predictions will be wrong. Let's discuss the macroeconomic situation a little bit more. Looking at the current trends, the first half of 2023 may be a continuation of the 2022 downturn in most risk assets and the onset of a US recession in the first quarter. We can look at the 4-week moving average of continuing jobless claims to see that the actual unemployment has probably already been increasing. Continuing jobless claims is at 1.679 million from a low of 1.314 million, and recessions normally start when there is a 30% increase from the low point in the statistic, according to T1 Alpha on Twitter. We're just about there. We should also see significant earnings declines in the S&P 500 according to Macro Alpha, using his credit impulse measure that measures commercial loan activity. He predicts a possible 30% or more decline in earnings, in stark contrast with the small increase that most analysts estimate. According to Rick Palacios Jr.'s chart, real estate prices that have already declined in 2022 have a lot more to drop, as high interest rates and high home prices have made homes the least affordable in the past few decades. If we have any crisis such as a repeat of the COVID lockdowns, a sharp stock market downturn, or a sovereign debt crisis, that may present an opportunity for the Fed and ECB and other central banks to pivot and start monetizing debt again. And if the US government issues more stimulus checks, we should expect inflation to come back strong. But this time around, stocks and bonds should continue to stagnate as people move to gold, oil, and commodities. A pivot may signal a good time to buy Bitcoin and gold. The US recession can take the US dollar down temporarily, but a strong dollar rebound relative to other major currencies could create a dollar liquidity crisis. There continues to be significant risk in Japan. The BOJ continues a massive debt monetization that can lead to a global sovereign debt crisis. Sovereign debt in countries like Italy are showing increased weakness, and a debt crisis can also happen in Europe. The Chinese real estate downturn should persist for years. The counterpoint for a rally in the new year is that this is the most anticipated recession in recent decades, and many money managers are already hedging downside risk. Hence, markets can surprise on the upside. China has been quantitative easing to prevent a real estate depression. That has increased global liquidity, but is likely not enough to prevent a depression of its economy or prevent a global recession. In the likely case of a recession, here are some fun price predictions for 2023. The S&P 500 reaches a low of 3,000 before bouncing on a Fed pivot. 2024 will be uncertain. The Dow moves towards 6,000 before the pivot. The NASDAQ QQQ moves toward a low of 9,500 before the pivot. The 10-year yield falls to 2.5% before the pivot and rebound. Gold makes a slight correction to 1730 before resuming towards all-time highs in the second half of the year. Oil moves significantly lower to $58 before a Fed pivot leads to a sharp rebound and eventual oil shock and stagflation in later years. For Forex, the dollar starts weak and rebounds to cause more global liquidity issues. The yen starts strong and then weakens rapidly and may eventually crash in the coming years. The euro may be somewhat flat if the winter is not as harsh as it could be. Gold is somewhat soft in the first half but starts a major move against all fiat currencies in the second half and in the coming years. Bitcoin is even softer in the first half but then rallies along with gold against other fiat currencies. Those are my fun predictions for 2023. And the last thing, 2023 will be the year when artificial intelligence becomes mainstream and eventually may be the wild card for the tech industry, the economy, productivity in 2024 and beyond. So I want to wish everyone a happy new year and let's have a great 2023.